The United States and China are locked in a high-stakes trade war. The latest volley came from Washington. The United States imposed hefty tariffs on a broad range of Chinese goods. These tariffs, set at 125%, targeted sectors like manufacturing and consumer products. However, in a surprising twist, the United States offered exemptions to certain electronics. Smartphones, computers, and key components like semiconductors were spared. This move brought a sigh of relief to tech giants like Apple, heavily reliant on Chinese manufacturing. The exemptions highlight the complex dynamics of this trade war. On the one hand, the United States aims to pressure China on issues like intellectual property and trade practices. On the other hand, there's a recognition of the interconnectedness of global supply chains. The exemptions for electronics demonstrate a desire to minimize the impact on American consumers and businesses. The tariffs, however, remain a point of contention, creating uncertainty in the global market. China's reaction to the United States tariffs has been calculated and strategic. While firmly opposing the tariffs, Beijing has refrained from escalating the conflict further. China reciprocated with its own set of tariffs on United States goods. These retaliatory tariffs, also set at 125%, targeted key American exports like soybeans and automobiles. This tit-for-tat approach reflects China's determination to protect its interests. Despite the retaliatory measures, China has been vocal in calling for dialogue and negotiation. Chinese officials have repeatedly stressed the importance of resolving trade disputes through dialogue. This measured response signals a willingness to find a negotiated settlement. China recognizes that a full-blown trade war would harm both economies. However, Beijing remains steadfast in its stance against protectionist measures. The trade war's impact is reverberating through the global economy. Financial markets have shown heightened volatility. The uncertainty surrounding trade policies is causing fluctuations in stock prices and currency exchange rates. Businesses are grappling with disruptions to supply chains. The tariffs have added costs and complexities to international trade, forcing companies to adjust their sourcing and production strategies. The exemptions for electronics have provided some relief. The exclusion of smartphones and computers from the tariffs has prevented immediate price hikes for consumers. However, the broader economic implications remain a concern. The trade war has the potential to slow down global growth. If the dispute escalates further, it could disrupt international trade and investment, leading to job losses and economic hardship. This trade war is the latest chapter in a long and complex history between the United States and China. The two economic giants have grappled with trade imbalances and intellectual property disputes for years. The current situation is a culmination of these long-standing tensions. The tariffs imposed by both sides are unprecedented in their scope and scale. They represent a significant departure from the principles of free trade that have governed the global economy for decades. The outcome of this trade war remains uncertain. The tariffs have already imposed costs on businesses and consumers in both countries. A protracted trade war could have severe consequences for the global economy. Finding a resolution that addresses the concerns of both sides is crucial. This will require dialogue, compromise, and a commitment to finding common ground. The stakes are high, and the world is watching closely as the two superpowers navigate this turbulent period in their relationship.